this would be the worst of all the cycles versus the best of all of them. Now,
in today's video, technical analyst Gareth Soloway tells us about his price prediction on Bitcoin and financial market recent moves and what we can do to stay safe and make some money during these times of uncertainty. Let's dive into the interview.
It's looking at the commodity prices and trying to gauge when they started to fall and then how long does it take to pass through to the consumer. So I guess I would say I'm not super surprised, but I do think that this is the top on CPI readings. And I do think that by next month, you're going to have this full month plus of oil falling, copper falling. I mean, all these other commodities just collapsing pretty dramatically. And that probably starts to show at least next month a slight downtick. When people were saying, $150, $200 oil, I was like, what planet are you guys living on? I'm looking at people changing their driving habits dramatically. And then you throw into the mix the Fed hikes, which is going to slow the economy. And I'm trying to figure out where are these people? And we're talking about analysts. I mean, Goldman Sachs. I mean, these players that should have immense knowledge, they're calling for these ridiculous price targets on oil. And I just did not see it. I think also to keep in mind, I think you can see the stock market reacting today. Like there were a lot of individual investors, and I saw it on my Twitter feed today, that when that print came out, they were kind of, oh my goodness, the end of the world. And you saw the markets initially get crushed. We saw a big gap down, but the market started to recognize exactly what we've just said, which is this is peak inflation. All right. This is as high as it's going to get, at least in the near term. Now, it doesn't mean, and I think you would agree, we're not going back to 2%. I mean, that's not happening for a long, long time, if ever. But it's the market wants that little bit of hope. And just to see that number down ticking, which if you look at any commodities out there, you should see that next month. And then unfortunately, the metrics that the Fed is taking to control it will then probably cause a slowdown that it might start to get out of control a little bit by the Fed. And then the question is, at a 4 to 5% handle on inflation, does the Fed start to say, okay, we need to start to loosen policy because unemployment is now 7 or 8 or 10%. And I think that's what investors have to watch. Not so much this year. I would expect that more to be an issue next year. I'm in the camp of 75. I know, believe it or not, I even heard 150 basis points today, but I think that's ludicrous. I think even 100 is a little excessive considering the signals. I mean, the Fed has to be looking at it like we're looking at it. At least I really hope they do. Otherwise, you really start to wonder about the Federal Reserve, where they see the economy starting to slow. They see these commodities coming down, which are gauges of economic growth, as well as projections on forecasting economic growth. And they have to be saying, okay, let's stick with 75 basis points and then we can reevaluate. Because I think after this Fed meeting, there's not another one till September. So that would be my guess, is they kind of go back into that wait and see mode and then see where we are then. And again, look at this beautiful reversal on the dollar today after initially popping up. But if you go to a larger time frame, let's go to the monthly. What you can see here is you have two trend lines that are converging right at the high on the dollar here. So big resistance on the dollar. And again, for me at least, this was a signal that an overbought dollar with peak inflation, and again, we've known that with inflation, the dollar's actually strengthened. It likely starts to come back in here, as the Fed may not have to tighten quite as much if we do see peak inflation. So everything that was kind of, the dollar has been crushing the stock market. We've seen it crush commodities. So I was looking out there across the board at so many different things, from tech stocks to gold to silver, all those types of things in terms of looking for some opportunities this morning. I mean, gold recently has dumped out, but for the most part, if you look at where gold is from the start of the year, I think gold is down maybe 3% or so from the beginning of the year. The dollar has rallied, I think, about 15 to 18% since the start of the year. So for me, that's kind of an indicator that there's money flow going into a gold type position. And so again, gold hasn't been a great performer. Granted, compared to the stock market, compared to crypto, it has been amazing. But still, you haven't seen it outperform to the upside in a major way. But I think, again, I'm still a big fan of gold down here. If the dollar really starts coming in, gold could really be up for a big move to the upside. we've been down into this 2017 high, right? I mean, we've been below it a little bit. We've been above it a little bit. As of yesterday, we were below. Now we're back above today. And here's that line right there. But I think people were not, most crypto investors, all they do is focus on crypto. And again, I think that's what my stock background has been very good for kind of seeing the bigger macro picture. And you have to understand that if the dollar wasn't surging, I think crypto would be much, much higher than it is right now. And if the dollar is topping, and you can already see the reversal in crypto as the dollar's fallen today, I think crypto has upside. I'm still in the case here where my midterm outlook is still down, but my near-term outlook is to the upside. I think we take out the short-term highs of 22, and I think you're probably headed back to at least 25.5 here. And that's assuming the dollar really has topped and starts to come in over the next couple of weeks. Definitely a possibility. I would still handicap it as the least likely scenario for me. Just like always, I'm always fully aware that anything can happen, right? I mean, we could go lower, we could go straight up, but ultimately, there's still too much junk in the system. And we've seen bankruptcies, we've seen Terra Luna kind of collapse and all these other things. But I don't think, I mean, for me, I still look at how many cryptocurrencies are out there. That's still problematic to me. Like, how the heck can there still be over 10,000 or 15 or 20,000 cryptocurrencies? Where does the washout finally occur? And so it would be hard for me to imagine that we're really done here, especially because of this, right? So think about this. Previous cycles have always had the Fed helping by printing. This is the first cycle we don't. So the logic would dictate this would be the worst of all the cycles versus the best of all of them. Now, granted, you do have more adoption, so I think you have to factor that in. Maybe if regulation came out, I think that could be a possible major positive as well. But I'm still in the camp. I got to think that we're headed lower after we get some sort of uptick here. So let's say that price gets driven down to 12,000 or 10,000 on Bitcoin, which I don't know where Michael Saylor's margin calls come in. I know he has leveraged out a little bit, but that would be the other thing that would be really scary. Like if we started to break, let's say the 17.5 low, where is his point where MicroStrategy has some issues there? I don't know. I don't remember. Initially, I heard it was around 21,000, and then I think he kind of updated it and said it was lower than that. But that would just be something else to kind of keep in mind, is that when you have an illiquid asset like Bitcoin, if any of these, I mean, did you hear about Mt. Gox, right? So apparently they have 150,000 Bitcoin that might get unloaded. Now, market doesn't care about that right now. But if we were to get another leg down, do these margin calls, bankruptcies, all these factors start to kind of trickle through? So I could almost be on your page where maybe this is a bottom if we don't go at all any lower. That would trigger more bankruptcies, which would be more liquidations and those. But if we do take out 17.5, that's where I would get real nervous, minimum going down to 12,000, maybe even sub 10. I mean, if the dollar tops, you at least got to get a near-term rally. Again, the question is later on. My biggest fear, I think, is that if the economy slips into recession, right, and you have a scenario where risk assets take another hit because of that. So let's say earnings start to really suffer, maybe people start to fret about it's going to be worse than a recession, but maybe like a Great Depression or even a Great Recession like we had in 08, 09. Does that deleveraging then even take Bitcoin down with it like it has now over the past, year? I think that's part of the great thing about investing, right? You have people on both sides, and that's what makes a market. So all we can do is make the best judgment, and the chart. I use the charts myself, and it seems to give me a nice little edge, and that's all we can do.
Yeah.